Well, good morning, traders. Welcome to followmetrades.com Saturday scanning session. I'm Dean Jenkins, founder of followmetrades.com, and I've been looking forward to this. I'm ready to go find some great trades through this session and to answer any questions that you have and to take a look at any symbols you're interested later on in the session. I'll be happy to do that. Before we get started, make sure, I know we got a lot of guests here, and I'm really happy and glad to have you here. If you're not familiar with the Zoom webinar platform, take a look there and notice that there's some icons you can use. There's a thing to raise your hand, and there's also a chat button. And in the chat, if you click that, you'll bring up a little chat panel, and you can type in your questions. And I definitely would be happy to take your questions through the session, so make sure you can find that. In fact, go ahead and test it. While people are still logging in, if you would, type in where you're calling in from, what city, state, country, or region, or whatever. It's always fun to see. We typically get people from all over the world. Mark's calling from Everett, Washington. Well, not too far away. I'm down here in Olympia, Mark. Chandler, Arizona. Robertsdale, Alabama. Nice. Columbia, South Carolina. Houston. It's hot in Houston, right? Ron, good morning. Charles, Lay Charles in Austin, formerly from Woodinville. Hey, not too bad. Hey, Michael, a little bit we'll be able to take a look at some of those symbols for you. You're in San Diego, Redondo Beach, California, Louisville, Wisconsin, Philly. My teammate Eva is on the call, and she's from Philly as well. Utah, Sandra, Orlando, Rancho Santa Margarita. Michael, anyone from Italy? Robert Johnson from Seattle. Well, hello. Supposed to get hot, Robert. Supposed to get hot today, maybe close to 90 again. Tulsa for Bob. All right, it looks like more people are logging in still. And again, I was encouraging people to find that chat button so you can type in questions and as we go, comments. Definitely want to make it interactive. This is an informal session. We're here to find trades, and definitely happy to take a look at any symbols you're interested in later on and answer any questions you have. Chris says ABBV looks like earnings reversal after Citron threats. Well, we'll be happy to look at that in a while. Robert says it's okay, better than some other things. Yeah, I think you're talking about being warm. Yeah. All right, well, people are still logging in, but we're going to go ahead and get started because you guys are on time. Make sure you got your coffee if you like coffee, and sit back and let's go find some trades. All right. Good morning, Miles. All right. Well, the whole thing we're here talking about today is finding great trades. You know, I get asked all the time when I'm doing webinars and talking to customers and just talking to people about trading. Is how do you find trades? Right? There's thousands of stocks and ETFs and stuff out there to look through, and it can be like finding a needle in a haystack sometimes. And I've come up with some approaches to just try and make that a little bit easier, to narrow that down so we can look at a very narrow section of the market and a manageable section, trying to find some good trades. Stroudsburg, PA, hey Glenn. All right, so finding trades can be really, really hard. It's like finding a needle in a haystack, and let's try and make that a little bit easier. Let's go through that haystack today, and let's see if we can find something good. And I'm pretty sure we will. We have so far. Yeah, quick disclaimer. Yeah, I'm a trader. I'm not a financial advisor, and I'm not giving financial advice. So I'm going to be looking at trades, looking for trades, and the ones that I like, I'm going to call out and give some trading parameters on them. But whether any individual places an order, participates in the market in any way, strictly the decision of each individual. Only you know what's appropriate for you, your risk tolerance, your account size, many other factors. So I share what I like. I share what I'm doing, my setups, and each person makes their own decision. I'm not giving financial advice. Everything's for education and information purposes. Sound fair? All right, Don. Yeah, this is being recorded, and barring any technical glitches, we'll be sending it out to everybody who registered. David, yeah, we're still in the index. We're still in it. All right. Well, I know many of you are guests. You maybe haven't been on a webinar with me before, so I'll just do a quick introduction. My name's Dean Jenkins, and I've been trading for 25 plus years now. And I really got started when I was working for Intel Corporation, the chip company, and I started in 1993, and they gave us incentive stock options and had an employee stock purchase program, and the thing, you know, like clockwork, split and doubled every 2 years, and I began to see the real power of, you know, well, you can make some money with stock pretty soon. Most of us, we didn't care about base pay, you know, when it came time for the annual compensation reviews. Like, give me more stock, and that was a great run. And so I just learned both the power of it and a little bit about how to manage orders and, you know, all that kind of stuff. And I got interested, and through the .com thing, I started taking some of that money and investing in some stocks, and some went well and some not so well. During that time, I got an MBA from the University of Washington, and for quite a while, I was a fundamental trader, you know, analyzing earnings statements and doing all this stuff. And that turned out to be totally frustrating. And I totally gave up on the market in about 2007, just pulled everything out to cash, and, you know, I was just frustrated and went to the sideline for a little bit. It was just lucky. But because then the market, you know, tanked, and I didn't participate in that, and that was just pure luck. But I couldn't stay out. I had seen the power of the market, and you know, I got back in after the 2009 crash, and, you know, kind of got in at the bottom. I bought Bank of America at $5 and a few other things, and, you know, the recovery started, and all of a sudden we're in, you know, 150% profit, and I was stressed out. I didn't know what to do. And should I take my profit, or am I going to miss out on more? Or am I going to give it away? I'm sure you've all been through that in trades, because I didn't really have a trading system, method, a set of rules to follow. But I got interested in about 2010 finally, and after just researching, and boy, there's got to be a better way to do this where you're not stressed out, where you just have a set of rules to follow. And in 2010, I started studying technical trading, and boy, I made every mistake possible. And I bought lots of indicators and lots of training, and learned that in this industry, there's some great folks, and then there's another set of folks who are not so great, but they'll sell you stuff. Anyway, 2012, I finally settled on my current trading system, and I finally started getting consistent profits. And that was very rewarding. And, you know, now I make my living trading and sharing my trades and training others. I launched my company, Following the Trades, 3 years ago in August of 2015. So that's just a quick intro to me, who I am. You know, what ultimately matters is, hey, are you making profit? Yeah, I am, consistently. I said I settled on my system 2012. So here's my annual results. And you can see year after year after year, I'm getting pretty solid results. You know, there's no, you know, I'm not claiming that someone can take $5,000 and turn it into $1 million in 6 weeks. That's ridiculous. But I am carving out consistent results. You know, if you average these, it's about 30, you know, low 30% per year. And most mutual fund managers will kill to have numbers like that. And if you look at this year-to-date number, yeah, that's a little bit low. This is updated through yesterday. And, you know, we're kind of right between the Dow. Hey, I'm beating the Dow. I'm beating the Dow. We're at 2.88% return year-to-date. And I don't know if you noticed, but this is a tough year to trade, right? It's been a very, ultimately a sideways market with some pretty dramatic swings. And so it's been a tough market to trade. But I've been in this situation before where we got a little slow start of a year, and we ended up finishing up with good, solid, respectable numbers. And I'm confident. I'm just going to keep following my system, following my rules, and I know that over time I'll be rewarded for that, because the system obviously has been proven to work. These results are audited, by the way. I just think it's so important that if I'm going to claim that I make any kind of, you know, results or returns in the market, that I can back that up with some evidence. I know not everyone does. So you can see here on my homepage, I got this verified seal. You click here. And each quarter, I turn my brokerage statements over to an accounting firm, and they take a look at my website, what I said I'm trading, and then they go look at my brokerage statements, and they produce an audit report. And you can see it here. They're just about ready to give me my Q2 report. And on each year, if you want to see the details, right, there's these green buttons. It's like, well, so what trades made up those numbers? Click on this button, and you know, complete transparency. I think you should, if I'm going to sell services, I should be completely transparent. You can see what I'm doing. So like 2008 year to date, here's every single trade I've taken, winners, losers, right? And here's the result we got so far. And again, I'm confident in the system that, you know, we're going to close the year out strong, and over time we're going to continue to get consistent results. All right. Hey, thanks, Chris. All right, a little bit of housekeeping before we jump into here, before we start looking for trades. I'm going to explain the trade setups I'm looking for, because if I'm going to scan for trades and tell you I like it or not, it probably makes sense that I explain why I like it, what my criteria is. I'm going to walk through my scanning technique. How is it that I take that haystack and narrow it down and be able to find a couple needles that might be in there? I'm going to go find some great trade candidates using that technique, and then I'm happy to take a look at any stocks you're interested in after we do that. I may love some of your ideas. Sometimes I get good trading ideas from sessions like this. People, hey, when I look at, look at Intel or look at Apple or something, I go, oh wow, that's a great chart. So I'm happy to do that. We're going to be adding the candidates that we find to a spreadsheet, and then I'll give you a link at the end of the session. Eva, my teammate, is here, and she'll be typing up any symbols that we have on a spreadsheet again, making notes, and at the end we'll get a link where you can download that at the end of the session. So you definitely want to stay here till the end to get that, so you don't miss out on getting a list of all the trades that we find here. All right, let's talk about success here. I love quotes from, smart people. Most of us are trading for profit, to meet some other goal. And, to be consistently profitable would help us with success that we're seeking. And so I like this quote from Benjamin Disraeli. He said, the secret to success is to be ready for your opportunity when it comes. And so I think that really applies to trading, because it takes a lot of training and preparation and work so that when we do find a good setup, right, we have a plan, right? We're prepared. And Louis Pasteur, a similar quote, said, in the field of observation, chance favors the prepared mind. So it's all about being prepared, having a plan. And here's what I have learned over the years in trading. And again, it took me a long time to get here, and I made a lot of mistakes. You've probably made similar ones, right? All mistakes are written in red ink too, right? But here's what I've learned, and I think it doesn't matter what your trading setups are, your plan is. I think these things are universal, right? To be a consistently profitable trader, you got to have a plan, right? And I think these three things are essential to any trading plan. You got to have trade setups that are proven to have high probability outcomes and a high reward to risk ratio. Right? You got to win more than you lose, right? You got to have a high probability outcome. You got to have a method for managing risk. You got to, some trades you're going to lose, and we have to have a method for controlling that before we get into the trade, of determining how much would be a tolerable loss, and a method of controlling that so that it is a controlled loss and not a devastating loss. And then a trade management strategy. What are we going to do once we're in the trade? How are we going to get max profit? Where are we going to take profit? Where would we get out? A little different than risk management. I talked earlier about, being in a winning Bank of America trade from $5 up to 12. And it was stressful because I didn't have a trade management plan. I didn't have criteria about, when to close the darn thing or when to stay with it. So I think those are all essential elements of being a successful trader, having a plan, having great trade setups that are proven, having a risk management strategy, having a trade management strategy. All right. I'm going to walk through the tools that I use in my trading. And let me just show you, it can be boring to be in PowerPoint. I didn't want to tell you what I'm doing, so when we finally get to looking at trades, it makes some sense. So I'll show you a live chart here. This is Yandex. Somebody asked about Yandex, was David said, hey, you still in Yandex, right? So I'm going to tell you about it, but I use a combination of a very simple version of Elliott Wave, of Ichimoku cloud. You can see the cloud on the chart here, and Dow theory. So this is the long trade we're in Yandex. It's a Russian internet company, and we're in profit, right? You can see, and what made me like this trade was we had this big impulsive move up. We had a correction, and now we have clear evidence. I'm going to talk about my tools, what clear evidence looks like, that the next trend is beginning. And these lines on my chart, I've got some Fibonacci retracement extension lines, and then This red line is my current stop. This light blue line is where I got in. And way up here, this green line is my target, where I'm projecting it's going to go. And you can see the blue line here, we got in at 35.27, and we're in profit. Right? It went up. That's the goal on a long trade. Granted, the histogram is a momentum oscillator. It's called the owl. It's very similar to a price oscillator. All right, so that's just a quick glance at a chart. Keep it real. All right, now I'm going to talk about these tools. I use Dow theory, which just is proof for trends. I use Ichimoku cloud. I'm really just looking for price to be above or below it, and Elliott wave. Are we in an impulsive or corrective wave? My overriding criteria here is that I want high probability outcomes. I want there to be a pretty high probability that the trade's going to win. Right? I can't guarantee it. There's never a 100% win, but I want a high probability, and I want a great reward to risk ratio. So if it does win, I want to make more money than that I would lose if the trade fails. Right? That's super important. We'll talk more about that. All right, and do continue typing in questions as we go. So it looks like more people are still logging in, and that's awesome. I'm going to go ahead and turn the camera off. So I've introduced myself and all that kind of stuff. So welcome. And now I don't want to be in the way of the slides and the charts and stuff. So I'm going to turn the camera off. All right. So the tools I use: Dow theory, Ichimoku cloud, Elliott wave, overriding factor, high probability outcome, great reward to risk ratios. So Dow theory, there's a lot to Dow theory. Charles Dow published a series of articles in the late 1890s in the Wall Street Journal, and they became, known as Dow theory, and were published into some books and stuff. One of the things he said, he created this rule, said, hey, a bullish trend, an uptrend is defined by higher highs, higher lows, higher highs, higher lows, and on and on. As long as that pattern continues, you're in an uptrend. Well, that's important because if you're in a trade and it goes up and you're happy, and then it pulls back, is the trade over? Should I get out? As long as it stays above the previous low or higher low, the trend is intact. And we can see that. Here I am in the index, and look, we're in an uptrend. Higher high, higher low, higher high, higher low, higher high, higher low. So you can see I trail my stop to the previous lows, and as long as we stay above that, that trend is continuing, and we should stay with it. Downtrend is lower lows, lower highs, lower lows, lower highs. A bullish trend begins higher high, higher low, new high when you get this sequence, and it ends when you take out a prior low. Same thing for a downtrend, lower low, lower high, lower low, lower high. Right, it's confirmed here, it ends here. So Chris, is this the index options trade? No. So Dow theory, just great to have these definitions and gives you some objective tools for determining whether a trend has begun and then when it has ended in your trading, rather than biting your nails and wondering. I use Ichimoku cloud. It's awesome. You can see the elements of the cloud are these lines here, the Tenkan and Kaijun. They're really just like moving averages. They're just calculated a little bit differently, I think more accurately than simple moving averages. And they project this shaded area. It's called the cloud, Kumo in Japanese. And the cool thing about the cloud is it is projected several bars out into the future. So it's projecting based on past price movement where support will be in the future. And you can see what the cloud does really well is when you break through the cloud, that's an additional confirmation of a trend change, and you use Dow theory and Ichimoku cloud together. Wow, we broke the cloud. We had a high, higher low, new high. We're above the cloud. It looks like we got a trend going, and by golly, we do. And then it projects support area. You can see price pulls back to the cloud, but then reverses and continues the trend. So it's a very helpful tool for that, for confirming trends and then projecting support and resistance areas. Works in a bullish trend or a bearish trend. Okay, I use Elliott wave, very simple version. I know a lot of people have looked at Elliott wave, kind of roll their eyes. There are very complex approaches to it, overly complex, I think. I'm just using a very simple version. All I really care about is trading wave 1 or 3. 3 is an impulsive wave, 5 is an impulsive wave, 4 is a corrective wave. So 3 is the big one, right? That's the big move. After you see a big move, you can expect a correction, and we can measure it and project where it's going to correct to. And coming back to my index trade here, this is, I'll get rid of some of this other stuff so you can see it. Right? This is a Fibonacci retracement line, real simple. All your platforms have it. It just says, hey, here's the big move up, right? Where do we expect it to retrace to? To these blue lines, the Fibonacci retracement zone, 38.2 to 68.1, 61.8. And it did, right? After this big move up, it retraced. Oh, look, perfect wave 4. Now we got evidence. High, higher, low, high, higher, low, broke the cloud. Looks like it's starting wave 5, and we can project pretty good confidence where that's going to go to. Fibonacci extension zone, 61.8 to 100, up into this green area. That's how I use Elliott wave. It's that simple. We don't need to get all caught up into some of the semantics of major cycles and super cycles and ABCs and all that kind of stuff. We're just looking for a big move, a retracement, a continuation, works up or down. All right. I mentioned risk management. It's critical. I think it's more important than your trade setups. You got to determine how much you're willing to lose on a trade. Of course, you don't want it to lose, but some can. And if we don't reconcile that before we get in the trade, then emotion's going to kick in, and we can get into this, cycle of really trying to stay with losing trades and really get hurt. So decide what a pain-free level is, an amount that will not be a setback. I use 2% of my account. So if you're trading a $100,000 account, $2,000 loss on one trade is tolerable. It's not fun, but it's acceptable, right? And I determine the stop loss price on the chart. I determine the exit point, and like here, my current stop is at this prior low because we have high, higher low, high, higher low, high, right? I put it at the previous higher low because if that price came down and hit that, the uptrend would be over. That's when I would want to get out. So I let price action determine my stop place, and then after I determine where the stop should be, then I calculate my position size, and I take, 2% of my account would be $2,000 is 2% of the 100K account. I subtract the stop from the entry. The distance between the stop and the entry is how much I would lose per share. And I divide that into 2,000, tells me how many shares to trade. Charles is saying, in technical trading, do I ever consider market factors such as trade war with China, stocks like BABA, Yeah. All the analysis happens on the chart. So all the technical analysis happens on the chart, but then I go look at the environment and go, and you're going to see this as we scan for trades today, what could be disruptive, right? Earnings, a drug announcement for a drug company, a trade war, something like that, right? Would make me be more cautious, maybe take smaller positions or wait until a known planned disruptive event has passed, right? They don't affect the analysis on the chart, but they certainly affect, whether I'm going to take the trade or not. I don't want to put blinders on and go take trades in the known chaos, right? And Mark, just use daily charts. I'm primarily trading stocks and options on daily charts. It's very comfortable, relaxed trading for me. The method works on different time frames. I do move to different time frames occasionally on some instruments. We were looking at a 60-minute chart on Intel earlier this week. But the method I'm using applies to any time frame. I'm currently mostly trading on daily charts. It's very relaxed, and you're moving slow. You got time to think things through, and I like it. All right. Trade management. Once you get in a trade, it's important to have a game plan. Where am I going to take profit? How and when would I add to the position? What would the conditions be for that? I got to make sure I stay with winners for as long as possible. Boy, the math. Everybody's heard it. You guys are traders. Cut your losers early, stay with the winners, right? Let winners run, something to that effect. It's important, right? Because if there's times when maybe your win ratio is only 50-60%. That's there's world-class traders that average about 60% win rate, and that's okay as long as the winners are much bigger than the losers. And the only way you get winners to be much bigger than the losers is if you stay with winners and let them run. You got to do that and have a plan for it. You got to exit the trade at the right time. All right. Here's what trade management looks like on a chart. So I initially set my stop, using Dow theory, higher high, higher low, set the stop there, and then trail it as new higher lows are put in, and then eventually we get stopped out of the trade. And you can debate whether you should actually have, a stop market order in or a stop limit order, or just a line on a chart and alert and go place the order when it's hit. Whatever you're comfortable with there. The point is to have a predetermined exit point on the trade and then to follow it. And you can see this was a wave 3. There was a correction. We traded that one, made profit, waited for the correction, traded the next leg, and then profit on this is Vail. And again, manage the trade by moving the stop, taking profit at key areas. So I'm going to read Ahmad's question here. Are the values of 2% risk or trade size, which is, I recommend more than 15% of your account in one trade? Yeah, it's from the original account size. So even if you've got capital deployed, I use the total value of the account. Otherwise, your trade size would shrink. And if you always got capital in the market, you'd always be taking very, very small trades. Now, you can cut back and do smaller trade sizes going into volatility if you still want to participate. All right, so this is trade management in action. I do this Saturday scanning thing about once a month. And back in May, we found a candidate that, it was just a textbook trade. It was amazing. And so here we had a scanning session on Saturday, May 12th. We identified a candidate, CL&A Clean Energy. And on Monday, we went ahead and entered that trade. And here's how the trade played out. Now, this is a lot of text to try and read through. We did end up closing that. We were using an option contract, and we got 134% profit in 18 days. That's pretty good. Not every trade goes that fast, but that was certainly a fun one. Let me show you on a chart how this played out. So here we were on May 14th. We took our initial entry, $2. I like these lower priced. I don't trade penny stocks, and I'll trade mid and large cap as well. But it's nice to have a mix. But this was a smaller cap, $2 stock. We got in at 202. We had our initial stop under this low, 154. Price action played out. We moved our stop. We moved our stop again, higher low. Took some profit number one at 274. And from 202, that's a nice percent gain, right, in a few days. Moved our stop again. Took profit again at 290. Moved our stop up to 303. Closed the trade on June 1st. So 18 days we're in it and made stunning profit. That's really exactly what we did. We found a good breakout trade, got in it, and then managed the trade for max profit. It's that simple. It's pretty easy. Anything worthwhile looks simple when someone who's learned it, playing an instrument. You watch Eric Clapton play guitar. It looks really easy. So you try and go do it. But the concept here is simple. We try to keep it simple, not make it overly complex. Right? Get in a good trade setup, manage the trade for max profit, follow a set of rules. All right. So that's what I'm looking for in trades. I'm using a combination of Ichimoku Cloud, Elliott Wave, Dow Theory, just looking for great setups, then using risk management, trade management. So let's find some trades, huh? Here's how I do it. Here's how I take that haystack and make it a little bit smaller, make it a lot smaller so I can go find a couple needles that we're interested in trading that might be out there. First thing, I just do a big picture review. Well, what's going on all around us? And people were asking earlier, what about the trade war? And what about, earnings and, all that kind of stuff? That's important. So I just sit back and go, what's going on in the overall thing? What's the overall market doing? And then I create a thesis. I go, here's what I think could happen next. Now, a thesis has to be proven. I'm certainly not going to trade based on my thesis. And I hear a lot of people doing that, whether it's, the Santa Claus rally, 4 out of 5 years, in late December, the market rallies, so I'm going to go buy it. And it's like, well, that's a thesis, right? And I'm not going to trade based on that. I'm going to go look at a chart and get some actual hard evidence of what's actually going on, right? Or, you can come up with any kind of thesis. You go read the news articles, go in Google News, go type in, market, and you're going to get all kinds of predictions about it's going to double from here and it's going to drop to 50% from here and theses about why. But, fine, create a thesis. Now you have to prove it. And that's what I do by go look at a few charts and see if my thesis is backed up by some data and if there's some tradable charts as a result. And that's what I do. I narrow down, a huge list of the market down to a very manageable list. I look for trade setups. I got my setups in mind, and then I go scan for trades. So I'm going to do that right now. We're going to quit looking at slides. We're going to go look at some charts, by golly. Can I set RAID alerts on the cloud? You mean radar alerts, Grant? And the answer is if you're talking about TradeStation and radar screen, yes, you can get alerts from the cloud. Yes. All right. So speaking of radar screen, I got it set up here on TradeStation. And here's my thesis. As I run a trading room, and last week in the trading room, we were looking at lots of trades. We found lots of trade candidates, and every time we looked at it, that's a great trade. Oh wait, it's got earnings in 3 days. You don't want to take, if you're going to be in a trade a few weeks, you don't want to take a trade, a directional trade right into earnings. Now there are earnings plays, earnings strategies. That's fine. That's not the system I'm using right now. I'm doing directional trades. I want evidence that it's going to go up, and I'll trade it long, or I want evidence that it's going down, I'll trade it short. And going into earnings, you inject some uncertainty, and you could change the direction rapidly and then be surprised and have a loser, right? So I don't want that. So it's like, wow, we're right in the middle of earnings season. It's kind of like piloting a ship through an iceberg field. It's like, hey, you got to be careful here. And so, okay, so the big picture is, the market is going back and forth, back and forth. There's some winners, there's some losers, there's some sectors going up, there's some sectors going down, and we're right in the middle of earnings season. So what I decided to do is, well, how about stocks, companies that have already reported? We're about midway through earnings season. At this point, maybe I only want to focus today on instruments that have already reported. Oh, okay. So I went and got a list of all the companies that have reported already as of Friday's close. And it was tedious. I'm not going to subject you to having to watch me put that list together. I already did it. And what I'm going to do is I'm going to insert that list here and then do some filtering on it. So I'm going to insert a symbol, and TradeStation is really cool because you just saves lists of symbols. So it's earnings as of 7/20/18. So here we go. And now we're going to run some indicators against these, because I'm going to filter these out at another level. But you can see this list. Got about 244 companies that have already reported earnings for Q2. So I'm going to, now some of these are smaller companies, or, I don't trade penny stocks. I don't mind a low price company, like I showed you one that was $2, but I'm not trading penny stocks. In fact, we had a good example of one. We looked at one in the trading room a few weeks ago, and some folks decided to trade it, and they ended up getting hurt. So I'm going to filter first. I'm just going to sort based on market cap, and I want real companies. Let's say at least 500 million market cap, right? Because we want deep markets, deep liquid markets. So this indicator over here on the far right is market cap. And so at least 500 million. So we're just going to delete these small players out of here. They're gone. And then last price, again, I'm going to sort based on price, because I don't want any penny stocks. Okay, everything here is the lowest one's $5. That's good. And then average volume. I do not want to trade thin. Once I get in a trade and then decide to get out, I'd like there to be a market for that. So let's sorted it by 10-day average volume. Let's cut it off at 250,000 per day. Okay, so I'm going to delete those. So now I've got a list of companies that have reported earnings already for Q2. They're at least $500 million in market cap. They're not penny stocks, and they got an average daily volume, 10-day average volume, shares traded of 250,000 or more. Okay. Now we've narrowed this list down. We don't have to waste our time on little fish. And we still got 142 companies. So now I'm going to use my indicators. and filter this down even more to some interesting candidates. So copy that list, and now I'll put it over here, and I'm going to run it against the Ichimoku cloud and a 200-day moving average. Yeah, the original list, Mark, good question. It came from I'll show you. Yahoo Finance earnings calendar. And it's a pretty cool tool if you want to know who's reporting earnings before or after whatever day. So here on the 16th, 16 companies reported earnings on July, right, 16th. Click that button, it gives you a list. So I went through all this starting from July 1st until Friday the 20th and just copied all these and put them onto a spreadsheet and then put them into the TradeStation. So it was tedious, and I went ahead and did that in preparation for today's session. Okay, so we've got our list here of companies that have reported earnings already. They're above $500,000 market cap. They're not penny stocks, and they have at least 250,000 shares per day on average traded. Now, I've got an indicator that I wrote here in TradeStation, and it's the simple moving average. And it's just a 200-day moving average. And I really just want to know, I wrote this indicator, and I just go, is price above the moving average, or is it below it? How far from the 200 is price, and how many days since it crossed? Because that's interesting. The 200 is probably the most popular for daily stock charts that most people look at. And so if price is above the 200, that's one bullish indicator. If it's below it, that's a bearish indicator. And the fact that it crossed can indicate a trend change. And then I've got my Ichimoku cloud over here, and I'm interested in whether the price is above the cloud, in the cloud, below the cloud. Okay. But what I'm going to do is I'm going to sort on bars since crossed, because these are the interesting ones. The ones that just cross over could be starting into new different trends, you know, coming from a downtrend and now heading back up, or an uptrend beginning to head down, right? And now I've got a mix of, you know, hey, I look at here at BBT, and it crossed one day ago and it's below, and these are below and this is above, right? And then I look and go, if it's below the 200-day moving average, oh, and it's below the Ichimoku cloud, and this might be a new thing, right? So now I've got a pretty narrow list of the ones that crossed recently. So we just took, you know, the entire market, 6,000, 7,000 companies, narrowed it down to 250, narrowed that down to about 140, I think it was, and now we've narrowed it down to 20 or 25 here at the top of this list that are worth scanning. So we've blown away a lot of hay, and now we're trying to look for a few needles. Did that make sense how we got here? Now let's see if the thesis was any good, right? We got a list of charts. Now let's go see if any of them are interesting. So now I'm just going to click on these. I got them linked to my chart. So let me bring that up. And here is BBT. And look, this is BBNT Corp. I do not know what sector this is in. I'm a technical analyst, not a fundamental analyst and trader, but I certainly want to know what I'm trading and just a little bit what sector it's in. I want to make sure I'm not overexposed in any given sector. Hey, Shiv says it's a bank. And so I've never heard of it. You know, the big banks have all reported, you know, Bank of America, JP Morgan, Morgan Stanley, Wells Fargo. And for the most part, they're doing pretty good. This is probably a regional or smaller player. Look here. This is interesting, right? We had a big impulsive move up. It did break the cloud a couple times in the 200, but ultimately continued to trend up. So it looks like we may have a correction beginning here. And if we look at these prior breaks, right, we didn't really have a lower high, new low, where here we do. Pretty definitive low, lower high, new low. So this may be a pretty interesting short candidate. and we could project where it would go to using Fibonacci retracement lines that we talked about before. How far will the retracement be after an impulsive move? And the zone, high probability zone, is 38.2, this blue line, to 61.8. So in this region here, it's got a midpoint of about 40, 43, 40, 44 bucks. Right, but we do have a nice low, lower high, low, lower high, new low. We're under the 200, we're under the cloud. We've got growing negative momentum down here. So that's not a bad setup. So BBT is our first candidate. And, you know, another thing I look at real quick is where would my stop be? Well, my stop would be at this last high. And then my entry would be, you know, if this thing opens Monday, somewhere close to this current price. And then what would my target be? Now, a very safe target would be the top of this retracement zone, right? You don't want to bet the farm that it's going to go all the way down. You can also use the midpoint. So at the top, our reward to risk on this is a little thin, isn't it? Because this distance is pretty much equal to this, okay? We're probably at my minimum threshold of about 1.2 to 1 ratio. So we'll go ahead and put that on the list and we'll watch it, okay? But the reward to risk on that one's not as good as some others. So I'm going to go back to my list here. Let's just look at the next one. So BBT is a candidate, BHGE. Okay, and this one, interestingly, so what's the biggest move on this page? It's this move, and then we had a correction. I think that correction was too big to be an Elliott wave for. It was. It went below 76.4. So this is actually the move that we're concerned with. Oh, Baker Hughes. Interesting. A GE company. Interesting. And here's one of the things I teach. I teach a it's called the Master Trader course, and I teach how we do these trade setups and everything. And one of the things I teach is if you're struggling with a chart, if you're spending too long trying to figure out what's going on, it's probably not a really clear setup, huh? And I'm spending too long trying to figure out what's going on here when there's probably better, clearer ones available, like this one. This is the next one on the list, BK. Bank of New York, Mellon Group. Interesting, isn't it, that these mid-sized or regional banks are showing up. This looks a lot like BBT. This one is very, very similar in that it looks like we got a correction. Now, it tried it before and ultimately failed. It's trying it again. And unlike BBT, where we had something new happening with price pattern, BK has done a head fake before. So let's see if there's a better one than that. I don't want to be faked out. Boston Private Financial. Boy, a lot of banks coming up here. Yeah, kind of same story. What I look for in these two is what I call an orderly market, where is it following an established pattern and does it respect support and resistance levels? Because if it does, that makes it a more predictable instrument. If it reverses at support levels and heads up, then when it breaks, that tells you there's something brand new going on. But this thing's broken support several times and then continued on. So let's just keep going. Cathay General Bank Corp. Kind of the same story, isn't it? That's not a super clean one. Hancock Holding. And this may be something, well, this one gapped up on that, on this, didn't it? We do see a bit of growing momentum. Well, it's tough to make a case. And again, it has not consistently respected those levels. So something new. Now here, now this is super interesting. When I say an orderly market and it respects support levels, so this one respected the Ichimoku cloud. This is Interactive Brokers. So anybody out there who's a IB fan. I know lots of people use IB. This one is an orderly market. When it hits support, it reverses back up. So when it breaks through support, that's new information. This is totally new information. It looks like something new is going on in the market. Rick says you got IB, less of a fan now. Well, it looks like some of the shareholders are less of a fan as well. So now the question is, we got a pretty good correction underway. How much? Well, it's already in the target zone. So, and now it's starting to reverse. So this actually may have done its correction and be getting ready for the next move up. So this would be a watch list item actually for a bullish trade. You would not do it yet, right? Now it could continue deeper here, but I think it's too late to try and short it. The short was up here when it broke the cloud and there was a new move down. I don't think there's enough profit left. It could end at any time. We've already got a high, higher low. So I'd watch, and if it can get above the cloud, then there's a long opportunity up to 89. It's too early, but that's a great watch list item. So let's go ahead and add that one, Eva. That's IBKR, and that's long. And the note would be it's a watch list, not ready yet. Let's keep going down my list. KSU. Kansas City Southern. Nothing there. Pac West. This is Seattle. Oh, Pac West. I was thinking of Pac West, the truck maker. Pac West Bancor. Yeah, not the most orderly thing in the world. And even though we got a method to filter it down, there's still an art to this, isn't there? It still takes work. It's still hard. That's okay. So this one actually, this was wave 3, this is 4, this is 5. So it's already finished a 5-wave sequence. And I'll show you that. This is 3, 4, 5. Now we're probably going to get some version of an A, B, C, and then wait for whatever the new trend is going to be. You can see this just about hit the retracement zone, came really close, met all the criteria, and right into that target zone above that green line. The target zone is 61.8 to 100, and it went right into the target zone. It's already done. It's fun to look at, but nothing there for us. Mark, is the Ichimoku Cloud a standard trade station now? Yeah, it's a free indicator that's on just about every trading platform. I do use proprietary settings on it. Snap-on. Remember I talked about orderly markets and whether they respect support and resistance. Here's an encyclopedia picture of a chart that does not. Look how this thing just randomly swings wildly. You know, where's it going to go next? Who knows, man? This is one, maybe it's a good day trading or very short-term trading, but on a little bit longer approach, this is the kind of thing you want to avoid at all costs. Remember, in our setups, we want some probability of an outcome. Pretty hard to figure out what's going to happen next on Snap-on. Interesting. This is a technology company that probably none of us have heard of, Sensient Technologies. This is a fairly orderly market. Look at this. Had a little bit of volatility here, but overall, we had a nice move up, we had a nice correction, and now something new is happening. We got a high, higher low, new high. After look at this. This is the value of the cloud, right? Once we break down through the cloud, it really projects pretty good what the resistance is going to be, and then we go back up through it and stay above it. It's beginning to project what the support is. It's not perfect, but it's a pretty good visual indication. And you can see our momentum's positive. We got a high, higher, low, new high. We're above the 200. Well, if we were to put in another high, that would look like a long. Now, of course, we have to go do a little bit of background on these companies, make sure they're not going bankrupt or there isn't, really disruptive patent or drug or whatever news coming out that would surprise us. But if all the boxes get checked, there's a pretty good looking long potentially setting up here on this. And I'd like a good new strong high right about here, about 73.54. So this is one we would put on the list. This is SXT, and that's a watch list, nearly ready. Look where the target's at. Huge target, 83 to 97, and that is actually possible, believe it or not. So that's another one. Walmart. No, Wall. I was wrong. WAL. Western Alliance Bancorp. So it did overall, it's been a fairly orderly deal. And we've had, low, lower, high, low that failed before. We got a low, lower, high, low. It's got a double bottom here. If we were to take this out, I could get pretty excited about this being the real beginning of a downtrend here on Western Alliance. Let's see what the target is on this thing. Well, that's not bad. If we got an entry here, and if it were to go straight there, our stop would be here. We're above this last high. And even with a conservative target, if I can get a line, it's going to be about 1.5 to 1. It's not bad. If we took an entry at 55, took it down to 50, that's a 10% move. 10% on the shares, that's a good profit. And if you were to do it with a put option, hey, you're going to make really good money. So that one, WAL, Western Alliance Bank, is a good, and again, I wouldn't trade it till it put in a new low, but it could pretty quick. So that's the, this is, I had a couple quotes earlier about, those who are prepared are rewarded, right? And so this is kind of how I go about being prepared. I typically take my trades off of a watch list where I've got stocks that I've identified like this. And then once the criteria is met, then I go take the trade, right? I always have an extensive watch list in play. You can see here my current pending watch list is right here. And when those trigger, we go look at them, make sure the criteria is correct, and we can trade. That's a lot easier than sitting down at your computer. Okay, what am I going to trade today? It's good to develop the list. Wells Fargo is next here. Man, that's just chaos. I've looked at it before. I'm not interested. Fidelity. Boy, all these banks, huh? All these banks. We do have a nice sloping downtrend here. Things trying to correct. Big, powerful move up here. Yeah. Legacy Texas Financial Group. Yeah. Texas Cap Bank Shares. Doesn't this look just like our last one that we put up, which was SXT? It's almost the same chart. No. Which one? Oh, WAL. Yeah. So WAL and this Texas thing are pretty much the same chart. No reason to trade the same thing. TMUS, T-Mobile. Well, finally, something that ain't a bank. It's kind of already in the target zone, isn't it? It's a pretty messy chart, too. Omnicom. No. Prologis. What I like is how it had it found support right around the 200 in cloud, and then made a really definitive break. Chris is saying it's in wave 5 now. I don't, wave 5 tried to start. I think it failed. I think it failed miserably. This was clearly 3, 4. Tried maybe 4. I think maybe we got a bigger 4 coming. I think this all could be just the beginning of 4. Is my thesis, Chris. Look at this momentum oscillator. Look how the green ones, smaller, marching down. The red ones, boom, boom, boom. These things are gaining momentum. This is like a coiled spring, and I think there might be a good short coming here on PLD. It's got a nice price target, still plenty of room left, down to 55 to, so let's do PLD. Let's put that on the list, right? We would probably want to see, another good break, but that looks pretty good. That looks pretty good. Charles Schwab, well, not a bank, but now this is something new. Look at this growing negative momentum on Schwab too. Look at that, the slope of how these red ones get bigger and bigger. Anything left on this? Yeah. By the time it took out this low and really proved it, your target's here. Not a ton of profit on that. It's a pretty nice, well, it's not, our entry wouldn't be till here. At that point, we could evaluate what the stop would be if we got another high down here, and then look at the reward to risk ratio. So let's put it on the list. SCHW. Let's put that one on the list. We'll watch. Putting it on the list doesn't mean we're putting money on the line. It means we're going to keep watching it and see if it gets better, and if the trade at the time it qualifies makes sense. Skyworks Solutions. Well, we got a nice downtrend going here. Now it's volatile. But boy, look at this. Low, big swing, low, lower high, low, lower high, hit resistance, heading down again, down 5%. That one actually could be a fast mover. So let's put this one, SWKS short, on the list. We've looked at 21 symbols. Went pretty fast, didn't it? Let's look at a couple more. ADS, no, BAC, Bank of America. Already in the target zone, trend's over now. Brandywine, Realty Trust. Boy, look at this one, just how it, look how it rides that 200. If it ever breaks it, that's going to be a pretty good one. Schlumberger. A little volatile, huh? Show you, I showed you an example of a trade we did take earlier, Clean Energy, CLNE. This was one that is back on my list. So I showed you earlier how we traded this. We caught this move up and it was beautiful. It's had a correction now. So this one we want to put back on the list to watch, that it's going to prove that wave 5 is starting. So we want to see a high, higher low, new high. And then we're going to get another, very high probability to get another move up here on CLNE. Yeah, the white line is a 200-day simple moving average, Mark. No worries. All right. Hey, Eva, how many did we get on the list? We must have 6 or 7 on the list now. 7. Okay, so I think we've got some good candidates there, and I want to move on. I'll take the trades that you're interested in now. What do you guys want to take a look at? And again, this is a two-way street. You may show me something that I totally like, that I haven't seen before or haven't looked at in a while, and we'll add it to the list. Don't be offended if I don't like it. Narrow is the gate through which good trades pass. All right, cat for Raj. So cat is obviously in a downtrend. No magic needed to figure that out. The midpoint of the retracement zone is down here at about 117. And so if we were to get another low here, our stop would be up here. And our target, I think we could use that midpoint. That's not a bad. That's almost a 2-to-1 reward to risk. So that's not bad, Raj. I think I kind of like cat as a short if we put in a new low at about 132.22 ish. John, HUI. John, that didn't work. HUI didn't have any data. LaCharles, DDD. 3D. Okay, so obviously this big impulsive move down here and in a correction. Let's see how far it's in the correction zone. So you would not want to try and trade this long in this correction. This is going to end at any time. And look how the momentum's bleeding off of it. So the next move would be short, and it hasn't proven itself. It's too early. So, you know, for this leg, it's too late to go long, and it's too early to go short. You want to see a low, lower high, new low. You want to see it break through support. And we're a long ways from that. So there's really no trade on Triple D. AKAM. According to my criteria. Now there's other ways to trade, but according to my criteria. Akamai, boy, this is a volatile, gappy bugger, isn't it? It's clearly in an uptrend. It's, you know, pulled back here, it's up, it's done this several times. I think it's too late in this trend to try and jump into it. It could fail up here. Momentum is dying. So I wouldn't go long, but there's no case for going short on it either. Walmart. Surprisingly, Walmart actually looks like a long. It's actually a very orderly market. Big move up here. Here's the correction right into the Fibonacci retracement zone. It's starting to show early signs of beginning the next move up. You got a high, higher, low, high, higher, low, high. I would want to see it break to 200. So if Walmart can get above 91.25, then this trend could be real, and it could be going up over 113 all-time new highs. If we want to see some proof. So we're getting close, but we're not there yet. Micron for Laura. So Micron, wave 3 up, had a shallow correction, had a target zone, it made it. We're probably doing an ABC thing. I think it's, we got to wait for a new trend to form on Micron. So, boy, it was a really orderly market. Now it's got a pretty complex correction, pretty chaotic. It's in a bit of a complex wedge, you can see here. Whichever way it breaks out of this is probably the way it's going, and it's actually a little hard to tell which way that would be. So I like things that are a little more predictable. Right now we can't give an analysis on Micron. Mark, do I trade ETFs? Yeah, all the time. ETFs are great. Grant, Weight Watchers. It's always helpful if you can buy a company, buy a bunch of shares in the company and publicly promote it and have the platform to do that. You know, it's been an impressive trend, right? It was flatlined back at 10 bucks. Now it's over 100. It looks like the correction's getting ready to start, but we've seen some fake outs on corrections before. So I don't join late into mature trends. So I would not be going long, and it's too early to go short. HON. HON looks like a good long. Honeywell. We had the wave 3 up. We had the correction. Clear evidence now. High, higher low, new high. Positive, bullish momentum. Taking out previous highs. Honeywell's actually a long right now. Looks good. And it's early in this new trend. See how it just took out those previous highs? Target 182. Current stop would be down here. So we could put that one on the list there. EBA. And that one's from Pavlos, no surprise. Pavlos is a graduate, and he's a longtime customer graduate of my Master Traders course, and so no surprise that he would find a good trade. John, QQQ, I do like ETFs. So I think right now any of the indexes obviously are very long in the tooth, right? Trading these on daily charts, you're at the we're 9 years into a bull market. So I'm waiting for signs, before I trade these. I don't want to go long. Trend trading is not my style. I'm a swing trader, and so joining late into a mature trend is not my thing. Now there may be shorter term trades on these for sure, on QQQ, on SPY, on DIA, but a little bit longer term, the trends are too mature. I'm waiting for the correction, which will come someday. We just don't know when. Let me take a few more, and then we're going to start wrapping it up here. Starbucks. So Starbucks, was a complex sideways correction forever. Then pretty sharp move down, nice correction to it. So a little bit shorter term chart. This actually is a good example where you can shift to a smaller chart and see that the setup looks great on Starbucks on a 60-minute chart. And we would just like to see it break the cloud down here at about 50 bucks. And then we got a pretty nice short down to below 45. So I kind of like that on Starbucks if we can break 50 bucks. Well, I am falling way behind. But I looked at several ideas. We found a couple that actually look pretty good. And we identified some interesting trade candidates along the way there. I showed you early on, somebody asked about one of the trades that we are in, and we're in Yandex, which is a Russian internet. They're going to report earnings on, I think it's the 26th. Now we're only in this with a half-size position because we're going into earnings. We're in profit. So if you're interested in other trades, after the 26th, if it's still if it's still heading up, if it gaps down, of course, we'll be out of it. But if it's still heading up and hasn't gone too far, you might like Yandex. It's got a price target of $49, so that's one you might like as well. All right. Well, hey, let me start wrapping up here just a little bit. Get back here. Where are we? We did live charts. So, to kind of bring this home, finding great trade candidates can be like a needle in a haystack. But, we spent, about 20 minutes, actually scanning through, 20 or 30 charts there. And we found, I think we made it up to about 10 trading candidates. So not too bad, right? We found a few good ones. And so we blew away most of the hay and found some good ideas there to keep an eye on and potentially trade coming up this week or beyond. So just to kind of recap what I think is essential in trading, you got to have great trade setups with high probability outcomes with a great reward to risk ratio. You got to manage risk. You got to manage the trades. That's all just super important. You guys agree? As you've watched me kind of apply this to charts and trading and talk through it, maybe raise your hand. Push that raise your hand button there, a little icon, if you think these three things are essential to profitable trading. There we go. We're getting a bunch of hands raised. Great. Cool. Glad you agree. Pretty hard to argue with, right? These are fundamental things. Doesn't matter what your trade setups are. Yeah, thank you. Okay. How many of you were excited about some of those trades we looked at. You know, pretty heavy focus on, you know, kind of regional smaller banks. We found some technology. There's, you know, we looked at Walmart, stuff like that. Mark, loved it. Good, Rick. Cool. And maybe you're excited about the trades, but, you know, we talked about the importance of, you know, having the setups and then managing the trades, managing risk. You know, maybe you're a little bit unsure. It's like, wow, this trade looks good. I'm kind of intrigued, but I'm not really sure how to manage them, how to do all that. Maybe you feel like this guy right here, you know. It's like, I'm intrigued, but man, that was a lot of information. I'm drinking from a fire hose here. And so I'd like to spend a few minutes just going over a special offer related to what we're going to talk about. Because some of those trades I'm going to be taking. I'm going to be publishing them to subscribers of my stock pick service. I'm going to take them in my own account with my own money. And we're going to try and make some profit from those. So remember, finding great trades is hard. And once you find the trades, once you get through that hard work, then you got more hard work ahead of you. You got to, you know, manage your trade setups, manage your risk, manage your trade for max profit. So I have a stock picking service, right? This already started. I'm trading my own account. People started asking, hey, looks like you're doing good. You know, can you share your trades with me? It turned into the stock pick subscription service. You can see I got some, you know, I've been doing it 3 years. Got some pretty happy customers. Pavlos, I got your quote here. Pavlos is online. He said, hey, there's no better site than Dean's. He spent lots of money on other ones, you know, that Dean's picks are worth the money. George here in Madison, Missouri. Hey, I got control of my account now. I'm trading successfully, right? I got dozens of other customer testimonials. It's very rewarding that people are getting value from the service. I got a great track record, you know, little slow start to the first half of this year, but I'm confident based on the system we're using and what it's been able to produce that we're going to, you know, wrap this year up strong and, you know, continue on beyond that as well, right? You know, the market is not a machine. It is not predictable. It's got variability. We just have to, you know, Mom said there'd be days like this, and we're going to weather it and get back on track. So what is a good stock picking service and everything we provide worth? You know, well, on average, you know, on a $100,000 account, the average return would be pretty close to $2,000, $1,900. You know, if you were to go buy 10 hours of detailed trade consultation every month, you know, from other providers, the average cost would be about $1,200. One-on-one consultations with top trainers, you know, about $1,000. Ongoing education packages average about $1,200. You know, just to get trade ideas and help managing those trades and consultation and ongoing training. You know, you're really looking at about $5,300. So I'm going to offer you all of this because I'm already doing it, and you can participate. Great trade setups, risk management, trade management, up to 10 hours of trade consultation every month, one-on-one consultation with me, ongoing education. You get access to and help with winning trades, and it's not going to cost you $5,300. The list price for my stock pick service, $127 a month, which is, you know, over $1,500 a year. That's good value at that price because people are making money with it, right? Average of return over $1,900 per month. So paying $1,500 a year for that's pretty good value. So I have a special offer for you guys today, and that is you can take a 30-day trial to my stock and option picks service. And I'll get the link posted for you here in the chat area so you can go check it out. So my stock option pick service, you can get 30 days for $37. And then after that 30 days, it's $97 a month, which is a 25% discount from the list price. And it has a 100% money back guarantee. For any reason it's not a good fit for you, you just send us a note. No questions asked, no hard feelings. We'll give you a refund. You know, it's not for everybody. You know, trading is very personal. It's got to fit, you know, your belief system, your psychology. You got to be comfortable with it. Most people that try my service like it. They stay. You know, not everybody does. Again, 100% money back guarantee. No questions asked. No hard feelings. Okay. So what do you get with the stock pick service? So here's everything just to run it down in a quick list. You get a watch list of potential trades that I found. So I continually scan them on a regular basis, and I generate them on a spreadsheet, and I put them on a website. And so you can look at the trades that I found that are candidates. So you get to see my watch list. You get an alert, email or text message, when I am going to take a new trade. Right? So when I'm getting ready to trade it in my account, I'll let you know at the exact entry, stop, and target price for the trade. Most trades can be traded with shares or options, your choice. I provide the details for both. I prefer options, but some people like to trade shares. It's cool. I give the details and the trade management and all the criteria you need to do it either way. You get alerts whenever I make a change. If we're going to move a stop, take profit, close the trade, you get an alert, email, text message. You get access to a live trading room where it's just like this. I'm presenting, looking at charts for an hour and a half in the morning at the market open Monday through Thursday. We're watching what's going on with the existing trades. We're looking for new trades, putting them on the watch list, answering questions. You got charts you want to look at. I'm able to do that. So you get access to the live trading room. You get a weekly live chat session. And the trading room it's not required. And we do record it. And then we do a short recap every day. So if you go, what happened in the trade room today? You can go watch 2-3 minute video. Go, okay, we got a recap there, a summary of it. It's recorded, it's put on a website, have access to it. We have a live chat session. Not everybody can attend in the morning. You got day jobs or whatever. So Wednesdays at 6 p.m. Pacific, 9 Eastern, we look at the trades, answer questions, talk about new trades. So it's just a live chat update midweek on the trades. You get a one-on-one consultation. When you sign up, you get a link and you can put time on my calendar and we can become acquainted and I can answer any questions, get you off to a great start. You get risk management and option trading tools. I have some training, some videos, some spreadsheets and stuff that help with risk management, some specific to options. So there's training and support available, ongoing support and training. Hey, thanks, Pavlos, everybody else. Hope you have a great rest of your weekend. Hey, trade safe no matter what you do. Keep the winners big, losers small, and by all means, have fun. Trading should be fun. It is. All right, take care, and we will catch you next time. All right, bye-bye.